Hey there, Jen Hernandez, Legacy Mutual Mortgage. So, bringing you a great topic today. I love to bring value to our realtors, referral partners, past clients, and have topics that can make their lives better. And this is one of them. So, we've got April Clark with us here today, and she is an health insurance dynamo. And I met April through actually a business coach that I have. And he said, April is thebomb.com. So I was like, well, I need to know her. So that's how April and I met. Just a quick commercial about me really quick. So Jennifer Hernandez, Legacy Mutual Mortgage. I've been in the business now. April, if you could do the slide on the next slide. So I've been in the business now for 27 years as of this September 2022. And I've closed lots of loans. I just surpassed 4,400. So I'm super excited about that. Just love helping people. And I'm referral only. So if you're watching this and you know someone buying or refinancing a house, let me know. And I would love to help them. The next slide will have my YouTube channel. That's where this video will actually be housed. April, if you don't mind going to the next slide. YouTube, actually, loanwithjen.com or loanwithjen on YouTube. I have a mortgage library of over 250 videos, 350 actually, that is all for your mortgage questions. So go to Loan with Jen on YouTube. So now I want to introduce April. Thank you for being here with us today. She's going to tell us a little bit about herself and what we need to know on the health insurance front. So April, thank you so much for being with us today.
Thank you. Thank you so much for having me.
Yeah, for sure.
Yeah. So I'm April Clark. I've been in the business a little over 5 years. I was a teacher in my past life. Strange transition. And I guess, the important part of that is I really try to teach my clients how to use their insurance and how to understand their insurance. So that's kind of how I add the teaching part into this. But I've helped over 3,000 individuals, small business owners, and families.
Awesome.
And the general person or group I help are small business owners, maybe mom and pop companies, companies with less than 10 or 20 employees, solopreneurs, sole proprietors, people who aren't offered insurance through their job.
Perfect.
Yeah. So let's see here. So just to educate people on different options. If you're self-employed, own a small business, what are your options? And one of the options soon after you leave an employer, a large employer, you will have an option for COBRA. Okay. COBRA is a continuation of your existing coverage. Typically you can keep that for 18 months. There are a couple about 2 scenarios where you can keep it longer than 18 months, but few and far between. So just kind of keep 18 months in your head. Once that's gone, there's no getting it back. Okay. It's typically 90% of the time the most expensive option. But the good thing is, exactly what you have. You're guaranteed to be able to get that if you're working for a large employer. It is the most expensive typically, and they do charge like a 3% administrative fee on top of the rates that the company's already paying for your insurance.
Okay.
Another option is if you do have a spouse that has a company or works for a large company that has insurance, you can always get coverage through them. What I've seen year after year, and it's getting worse, is the cost to add your spouse to your employee coverage. So some companies now are not even offering it to the employee's spouse, which is really interesting. But
Wow.
those that are, yeah, I know. Those that are, I would say at least 70%. I mean, it's going to be anywhere from $600 to $1,000 a month extra just to add the spouse that you're having to come out of pocket.
Yeah, my company pays for me, but then my spouse, you're right, would be around 600, but I do spouse and family. I pay an extra 1,500 a month for spouse and family.
Yep. So when I was a teacher, goodness, this was in the last time I remember the rates, it was 2011. And as a teacher, they wanted me to pay $1,400 a month to add my family. So my spouse and children, as a teacher. which is like 1 out of 2 of my paychecks, right? So, I mean, who can afford that? Definitely not teachers.
Yeah. Yeah.
And then, so what I do a lot of times is like in your situation where it's free to be under your employee coverage, but it's $1,500 a month to add your family. Many times I can save families, $200 to $500 a month off of that $1,500 a month cost.
Gotcha.
Right. And get them comparable, if not better coverage. So my goal is always to get them what they have or better and save them money. That's the goal. And sometimes I can't do that. And I'll let you know if I can't do that. I talked to a gentleman yesterday. I could not do that. And I explained to him why. And, I always want to put you in a better position than when you first spoke to me. Okay. The next option is the marketplace. Some people are call it Obamacare plans. Those plans, the good news about the marketplace is they do allow anybody to get on those. There's no pre-qualifying, if you will. Unless you're low income, they are definitely very expensive. And let me explain why. They've gotten more expensive every year, and the deductibles have gotten higher every year, and the networks and say number of doctors that take them have gotten smaller every year. Okay, I'm licensed in 33 states, and this is the pattern in every single state, all 33. What's happening is because they have to accept everybody. Let's say someone who's not low income, super healthy, hasn't been to the hospital in 5 years, maybe chooses not to get insurance because it's $800 a month to have insurance. They're healthy, they're wealthy, they don't get a discount. Whereas the person who maybe is not so healthy, maybe they have stage 3 cancer. It doesn't matter what that insurance is costing, they're going to get that insurance. And then that insurance company has to pay the claims, which unfortunately, because the numbers have gotten so high with the very unhealthy people getting on, and because it's so expensive, the very healthy people getting off, their claims are getting higher. It's sort of like if you have car insurance and your car insurance company, or even think of homeowners insurance, where there's a really bad hurricane that comes, and it takes out, say, Hurricane Harvey. After that, a lot of our rates went up, even if we didn't have a claim, because they had to cover all of those claims. Okay. It's the same with health insurance. So because a lot of unhealthy people were getting on the plans and a lot of the healthy people were getting off, they're actually losing money, and they're trying to make that money up by raising the prices and raising deductibles.
So I have a question about marketplace. Is or Obamacare, I guess we can call it. Is that so they'll accept anybody, including pre-existing conditions? Do they subsidize the premium if you're below a certain income? And if in Texas anyway, I know it's probably determined on the MSA, but like approximately what would that income be for them to subsidize it? So like where it's 800, let's say for someone like me who's healthy and, I make income that's above the limit, I know, then I'm paying the full premium, but what does a reduced premium look like? And how do I qualify for that?
Well, good question. So reduced premium, your reduced premium can be as little as $1, or they can just save you $100 a month off of whatever your regular premium is. It varies based on your income.
Yeah.
So there's 2 things that definitely need to know about that option. The first one is, you're a small business owner, is self-employed to some extent. Can you reasonably predict what your income is going to be for all of 2022?
No, I'm actually an employee, but I'm W-2, but I'm 100% commission. So you're right. I'm not on a fixed salary. I'm like a business within a business kind of, but no, I can go off average of the last 5 years, but.
Right. My income has changed, by tens of thousands of dollars every year.
Yeah.
Because I'm also, commission based and self-employed. Yeah. So the problem with that is the people that are typically going on the marketplace, again, are the small business owners and self-employed people, and they have to literally predict the future. So in November, you have to predict what you're going to make all of the following year. And
so the marketplace only adds people in November, is that right?
The typical time frame is November 1st to December 15th. The new president did extend it last year. I don't know what he's doing this year, but always know for sure November 1st through December 15th is safe. Okay. But what you have to do if you want a subsidy is you have to predict what you're going to make the following calendar year. And if you mispredict, and you can be over or under, you may be required to pay some or all of that subsidy back when you file taxes the following year. And any subsidy you get from them is considered income. So it can actually change your tax bracket for all of your taxes.
Oh, wow.
Right. And a lot of people, they don't know that. They get these subsidies and then the following year they're hit with this. And then, I just hate for people to learn after the fact.
So if let's say I get, there's still some people that are laid off from Cobra. So from COVID. So let's say my Cobra has run out and I'm at the 18 months and my spouse can't have insurance through the spouse anymore. I'm probably a good candidate for the marketplace, only because I have no other potentially in my head, I don't have any other choice. But and you can only hop on in the November, December timeframe, like I couldn't do it in June.
If you have a life-changing event, yes, you could do it in June. So if you lost your Cobra, you were at the end of your 18 months, you would have a 60-day window from the day it ended to get onto the marketplace, even outside of November to December.
So most people probably don't even know that, but they would just Google, Obamacare or whatever, and it would come up and they would just apply.
I'd strongly recommend don't Google that, because what you're going to do is you're going to get a bunch of agents calling you.
Okay.
A bunch of just agents anywhere. I don't know I'm sure you've seen where people apply for a home loan, or Google home loans, and suddenly they've got 1,000 phone calls coming in.
Yeah.
So that's the same thing that happens when you go on the marketplace or go on Obamacare, which is, even when you apply for the marketplace, the government actually sells your information and you're going to get all those phone calls, which absolutely blows my mind that the government.
Yeah, they do that on mortgage too. Yeah.
Blows my mind.
Okay.
So talking directly to an agent would prevent, 1,000 phone calls from coming in.
Okay. Gotcha. And an agent. So you are an agent, you're an insurance agent. So someone like you. Okay. So then private insurance. So let's tell us about that, because that's really what you help, your big expertise, what you help people with. So.
Right. There's three main categories, I would say. One is a health share. It's not actual insurance. So let me just explain. And again, there's pros and cons to everything. A health share is typically about 20% less than traditional health insurance. But legally, they are not required to pay any medical claims. And if they show you their legal verbiage, which, I always show people in black and white, anything I talk about, they are not required to pay any medical claims. What they do is they basically, every month, the board of directors votes on whose claims they're going to pay and whose claims they're not going to pay, or what portion of each claim they're going to pay. But legally, they're not required to pay any claims. One of the largest health shares in the country has an average $1.8 million deficit per month in claims they just cannot pay because they don't charge enough for the health share to cover all their claims.
So when you're in the health share, you don't know whether or not you're going to be the candidate for that month.
Absolutely.
So why would people do it? Because there's no cost, or is there a cost to it?
Oh, there's a cost. Yeah. Let's just say for you, a health insurance plan, $600 a month, a health share is probably going to be about $350 to $400.
Okay.
So that's very attractive to people. Another reason is many don't know that until they have a claim, they don't understand it. Just like I don't understand home loans at all. And I've had them. I've had home loans and I still don't understand them. So unfortunately people don't understand that, or they don't really pay attention to the fine print. Or they don't go to the doctors often. So they're just hoping for the best.
They're like, hey, I'm going to take the cheapest plan and cross my finger. That's the cross my fingers plan.
Yes.
For the reduced premium, save money now, could have big money out of pocket later.
Yeah. Just pray when you're in the ambulance and you'll find out in a couple months.
Okay. Got it. What does STM mean?
Short-term medical. Short-term medical is a legal term. Short-term medical is if you're buying a policy for, say, 90 days, 180 days, whatever that term is. And short-term medical, it's not going to cover any pre-existing conditions. But not only that, let's say you get on a short-term medical plan and you go with a 3-month plan and you're perfectly healthy when you get on it. Well, on the 80th day, you break your leg. you'll have coverage for that new broken leg until day 90. But now on day 91, you're now on a new rollover term because it was only a 90-day term. That broken leg is now pre-existing. So you better be done with all of your physical therapy, all your surgery, all your everything. Because now that broken leg's no longer covered because you're on a new term.
So why would someone get short-term insurance? Like, what would be the reason?
I see people, first of all, again, they don't quite understand what they're signing up for. It's very inexpensive, typically maybe a third of the cost of traditional health insurance. And a lot of times people do it when they're in between jobs because they think, oh, well, I just got laid off. I can't afford Cobra. This is cheap. My family's got coverage or I've got coverage and I'll have a job in a month or two.
Gotcha.
If they got a 90-day policy or a 6-month policy, they're like, I'm good. Not realizing that getting a job in a month or two nowadays is not an easy feat.
So just to repeat on short term, it's to help bridge the gap. I got that part. But if something happens to you in the short term and you're being treated for it, once the short term ends, even if you get another short term policy or go to some other plan, unless it's the marketplace insurance, you're not going to be covered for that thing that happened in the short term period. Is that right? Like, what if a major accident happened, like heaven forbid, and you're like on life support or something?
Yeah, you're
basically not covered. Okay.
Yeah, that's absolutely correct. And when you get off the short-term medical, you can't choose to get on the marketplace unless it's open enrollment. And then that plan wouldn't start until the following January because your life-changing event's only 60 days.
Yes.
On the short term for 90, you missed your window.
Yeah. So life-changing event is ending Cobra, having a baby, getting married, something like that.
Yes, or the death of the primary insured.
Mm-hmm.
Or being on ACA compliant insurance and changing zip codes. So like, let's just say you have insurance, you move from say California into Texas. Well, the California plan doesn't cover you in Texas. So now you get a 60-day window because you change that zip code. Your network is different. Okay.
So I know I'm leaning you, for those that are watching, I'm just clarifying. I told you I'd ask a lot of questions because, some people flip and need to flip in between some of these different things. So we covered short term. We know what health share is. That sounds kind of scary. I didn't even know that existed. And then the underwritten, I'm assuming, is your safest bet of private insurance.
Sometimes. So there's underwritten versus non-underwritten. So with private insurance, the majority of companies that even do underwriting, they do underwriting after the fact, which means they put you on the policy, they take your money every month. And then if and when you have a claim, then they go back and check your medical records and check your pre-existing conditions.
Oh, wow. How do they check that? What if you didn't have a doctor before and there's nowhere to investigate all that?
Well, then you're healthy. If there's nothing in writing, if there's not, at least in Texas, again, that varies by state. If you talk to a doctor about, hey, I've had these aches and pains for 6 months, I've had this lump for 2 years, then in some states that would actually be pre-existing, even if it wasn't already documented. But in Texas, if you've never spoken to a doctor about it, if there's nothing, documented, then yeah, okay, you're healthy. It's not pre-existing.
Yeah, got it. Which I'm sure is rare. Most people have had something, but I'm just being the devil's advocate. What if you're someone who hasn't had any insurance or done anything for a while and you've just gotten lucky that you haven't?
And I talk to a lot of people like that, and I tell them, whatever you do, get quality insurance, then go get the test or go get the wellness exam. Do not go, I don't know, you're not feeling well, you're exhausted, you go just to a clinic, you go get blood work, and now you have pre-diabetes. Your entire situation changes. Get the insurance, then go get the diagnosis.
So even the underwritten insurance is underwritten after the fact, once there's a claim or a event or whatever.
So it depends on the company. Some do underwriting before they accept you and take your money, and some do it after when you have a claim to decide if they're actually going to pay your claim. So okay. I educate people on that. And of course, what I recommend is if you're going to go with an underwritten plan, you always go with a company that does the underwriting before they take your money. I would rather be told, hey, I'm not going to cover your claims. I don't want your money. We're not going to insure you, than you taking $1,000 for a year and a half from me every month. And then I have a claim and now I'm not covered and I don't get my money back.
Mm-hmm. Wow. My
Pretty
head is
crazy.
already spinning. I mean, really, like this makes, I mean, there's probably a lot of people who go online and try to do, oh yeah, I'm going to do this, that, and the other, and they just don't know. I mean,
Yeah.
like being able to talk through somebody, someone like you, and just be able to say, hey, full disclosure, here's all the stuff I got. And then you can help them work around like, hey, let's use all these creative guidelines. That's exactly what I do in mortgage. I'm like, hey, can you go ahead and just tell me the story now? I was just talking to a guy this morning and I said, okay, we're going to find out about it the day before closing. Trust me, like the issue that it was. And it's going to affect everything. Let's talk about it now. Like I'm on your side. So let's just see how we can work together and get through the guidelines and make all this happen. So that's really what it's like. The same thing.
Yeah. Yeah. Except when it comes to your health, I mean, it can be, you don't always necessarily get the care you need. I mean, it can be life or death. And
Yeah, no, absolutely.
I've
Absolutely.
absolutely
Yeah,
seen it.
it's very, very delicate. All right, cool. Well, thanks for that. I just learned a ton. Thank you.
Yeah, you're welcome. And then believe it or not, just like homeowners insurance, and every other insurance, there's always exclusions. But understanding the exclusions and knowing what they are is, again, education is key. So some plans cover you on the job, most do not. So for example, Jen, if you walk into your office, you break your ankle, your insurance that you were paying an extra $1,500 a month to cover yourself and family does not cover you on the job. That's when you have to go to your employer and file workman's comp. Have you heard of workman's comp, Jen?
Mm-hmm. Mm-hmm.
Right, right. Well, if you're a small business owner or self-employed, you don't always have workman's comp,
Yeah.
right? So
Yeah.
knowing if your policy covers you on the job is pretty darn important. You're paying 1,000, 1,500, 2,000 a month. I mean, I'd like to know I'm covered around the clock. Maternity, if you're thinking about having a baby or you don't want to have a baby, do you want to pay extra for maternity coverage? Mental health, same thing. You go to a therapist maybe once, twice a month. Is it more affordable to pay for that out of pocket, or do you definitely want that covered under your plan? Or are there more severe mental health situations that maybe, inpatient hospitalization or alcohol or drug addiction might be needed, treatment for that? Not all plans cover that. There's a crazy exclusion on one of the more popular private plans that excludes coverage if you are hospitalized or need surgery on the weekends, unless
That is
it's
so
medically
weird.
necessary.
Is that because doctors and nurses are paid more on the weekends for weekend shift? Like, why would that be? Why would they have an exclusion? That's so weird.
Well, I think it's because if you're doing it on the weekend, you're more likely to be inpatient in the hospital rather than doing an outpatient procedure, which costs the insurance company and people 3 to 4
Or,
times the price.
oh, gotcha.
But
Okay.
what happens is people don't know it. They schedule their surgery. They're going to have their gallbladder removed, or who knows? Maybe you go to the hospital with kidney stones. Well, guess what? You are not going to die. You feel like you're going to die with kidney stones. I've had them, but you're not going to die. But if you go to the hospital with kidney stones on the weekend, you don't have any coverage on your insurance for that.
Wow.
I mean, you need to know that about your policy.
Yeah, you need to
Yeah.
know.
Yeah. Life flight's not covered on the majority of plans. Okay. We pray we never ever need it. But if you do, it's right now it's about $35,000 to $40,000 for a life flight.
Oh, wow.
Yeah. And most policies don't cover it. So knowing if it's covered or not. I mean, I understand if you need a life flight, you're not going to be worrying about it now, but after the fact, do you
Yeah,
want to
the bills could pile up. Yeah.
Yeah. And then there's another popular policy that excludes coverage for high dose chemotherapy. I mean, obviously, if the doctor is recommending high dose chemotherapy, your cancer is probably pretty aggressive.
Mm-hmm.
And I sure want to know my health insurance is going to cover that.
Yeah.
So just looking out for those. And then another one that people don't really understand a whole lot is just knowing the difference between an HMO and a PPO. So on an HMO, the majority of HMOs only cover you if you stay in network. Well, sometimes 100 miles from your house, there's no more doctors in your network. So you could legitimately be in Houston, go travel to Dallas, There are no doctors in your network. So if you break your leg, you don't have any coverage. Okay. And if you go to the hospital on an HMO, you do not have any coverage for anyone that is out of network unless the doctor deems you would have died or caused yourself a death if you had not sought medical care in 24 hours, in less than 24 hours. So for example, and I've had clients do this, right? They go to the hospital, have an anxiety attack. They thought it was a heart attack. They had an HMO. They were out of network. They thought they were dying. They weren't dying. They didn't have coverage. $20,000 later, didn't go towards their deductible or anything.
Oh, wow.
Yeah. And the other thing about knowing it with an HMO is I always thought if the hospital was in network on the HMO, that everybody in the hospital was in the network. That's not true. The majority of the doctors and testing labs that are doing the CT scans and everything else are not in the same networks. Whereas if you have a PPO, they are required to cover you whether you go in network or out of network based on the policy specifications.
Okay.
Okay.
Good to know.
Yeah. So the reason it's helpful to have a personal agent, I mean, I'd say first of all, Googling health insurance is definitely what you don't want to do, even though you feel like education is key. Unfortunately, those leads are basically the computer systems kind of collect your data. They sell it to agents or insurance companies, and then you're getting like what you feel like are spam calls. So with reaching out to a personal agent, that shouldn't happen. Also, if you have questions about your claims, I mean, if you've ever gotten a medical bill and understood it, I would be impressed. Understanding medical billing is, wow, it's next level. So having someone that you could call and say, hey, I just got a bill for $20, or I just got a bill for $2,700. Can you help me understand this? Is this correct?
Mm-hmm.
Okay. Geez, two people last year, I actually found a $10,000 mistake for two different clients that I got them their $10,000
Oh,
back.
wow. That's huge.
Right. And then also, if you have an agent that understands taxes, a little bit about taxes, a lot of self-employed 1099 business owners can write off what they're paying for their health insurance every month. And in some cases, they can actually write off their co-pays, their out-of-pocket expenses, even their over-the-counter medications. And knowing how you have to file to do that, and knowing, having a personal agent that understands that, you could literally save half the cost for your health insurance just in your taxes.
Oh, nice.
Okay. And by the way, you cannot get tax savings on health shares. So if you choose to have a health share as insurance, you cannot write those premiums off. So in essence, they're actually more expensive. Even if they pay for your claims, you not being able to write off your monthly payments costs you more.
Oh, wow. How about the short term?
Short term, yes, you can. Obviously, you want to verify with a CPA. But yes, in cases, you can absolutely write it off because it's still technically insurance.
Okay.
Right? And then gap coverage. A lot of personal agents can help you with gap coverage. Think of gap coverage is like maybe you break your leg and you can't work for 3 months. So not only do you need your health insurance and your physical therapy covered, but you're not working for 3 months. Typically, people don't have that kind of money in savings. It's going to help pay for your income so that you can use your income to pay for your mortgage and things like that while you're not working. Or God forbid you get cancer and you're going through chemotherapy for 6 months. And your husband's even missing work, or wife, because they're driving you to those appointments or visiting you in the hospital. You can get a lump sum paid directly to you so that your personal expenses are not being jeopardized, or your personal finances are not being jeopardized while your health insurance is covering your medical expenses.
Oh, nice.
Okay. And then for small business owners, I'm often an HR resource. So basically, if I service you or you and your employees, you and your team, they're going to be calling me and asking me about the health insurance, this medical bill. What was my deductible again? What doctors can I see? Rather than them coming to you, they can come to me.
I do have a question because I get most of my business from realtors. So I'm going to be sending this video to them because, I want to help them know about insurance. So a lot of reasons why they want to build their team and have one or two assistants and whatever, but they're like, oh my gosh, I don't want to have to deal with like insurance. And, they don't want full-time W-2 employees because they don't want to have to administer that, it's a lot. So can someone be 1099? Like, let's say I'm a realtor and I'm 1099 with whoever I'm my broker. and then I have one or two assistants and they're 1099, is it more effective for us all to kind of go W-2 and do it that way, or does it not matter? It's just self-employed is self-employed. I mean, I know I'm getting kind of granular, but there's people who might be watching that are in that boat.
I think that's a very legitimate question. I actually service a very successful large realty brokerage office in Houston. And part of her or their employees are W-2 and part of them are 1099.
Oh,
And
okay.
I have to service each group differently. Okay. So I completely understand your question. And it depends on the situation. It depends on how you do your taxes. That is definitely a conversation with a CPA as well. And it depends on the age of the people that you're putting in the group, and sometimes the health of the people that you're putting in the group.
Gotcha. No, but it's good. It's good to know that there are solutions, because I think that sometimes we let our fears or our worries just stop us and paralyze us from doing anything. So if you are watching this, and it sounds like you're in 33 other states, so this will be on YouTube. It could go anywhere. April comes highly recommended. Call her. If you already have someone in your sphere, call them. But it sounds like April is encouraging us to get help from somebody, and don't dive into this on your own, because there are people out there to help you. So that's awesome. No, I've learned a ton today.
Well, good.
Awesome. Yeah. Anything else we need to know? Oh yeah, the tax benefits. Do we need to know that?
Well, that was the whole, when we, I actually created an extra slide.
Oh, cool.
I'm great with health insurance, but
I like your skills. I like the visual in the background. That's good.
Well, thank you. I did miss double doing that. So yeah, it's just knowing that some plans are, you can write off, some plans you can't.
Yeah. Yeah, no, that's great. Well, put your contact. Yeah, there's your contact info. So feel free to reach out to April. Do not reach out to me for anything health insurance. I will not know the answer to that question, but anything mortgage, you can reach out to me. But I really, really appreciate your time today. And it's great. It's great to know what you can provide. And I've learned a ton. So those of you out there that are, wondering what's right for you, it sounds like there's all kinds of different options. So thank you, April. We really appreciate it. And
thank you, Jen.
Over and out. We'll talk to you soon.
I appreciate your time so much.
Yeah, sure.
Have a wonderful rest of your week.